Joining us right now for more on the markets is Sylvia Jablonski, the CEO and CIO of Defiance ETFs. Sylvia, how are you doing?
Good morning, Becky. I'm doing well. How about you?
Good. You know, we're watching the futures every morning, and it feels like a melt up again and again. How are you feeling about the markets right now? Does this feel like something that continues into 2024?
I'm feeling good about the markets right now. We're talking about a potential, eighth straight week here of upward movement. I think the Fed set us up to have a good party. It feels like Santa Claus is coming to town a little bit. You know, the dovish rhetoric and rates not going any higher, potentially getting cut next year 3 times, if not more, I think is what the market really wanted to hear going into the end of the year. And then on top of that, you have tailwinds, right? Seasonality, consumer spending. Wages are still high enough. Spending is still good enough. There's a lot of, kind of power behind the economy. Corporate earnings are good. So I think we're going to finish up pretty strong this year.
I don't know if you heard Rick and Steve earlier. They were having this discussion around the data release half an hour ago and just saying it feels like every Fed official since has come out and tried to walk the market back and jawbone them back down to say, you may have heard what you thought. You may not have heard what we were really saying in that messaging, that you could get 3 rate cuts next year, but you might not.
Yeah. And, for lack of better words, I feel like they always kind of do that. Anytime that the market takes the message to be a positive one, they always kind of walk it back. But I think if we just kind of look at what's going on, inflation is coming down. You have the price of, oil and gas coming down. Prices of food are certainly not going up. That number is getting closer to that 2.5%, if not 2%, whether it's, because of the Fed has already raised rates so high or because the economy is slowing. I think the inflation problem is arguably getting solved. So, I think the market wants a little bit more than the Fed is predicting. We often hear 4 to 5 cuts. They're talking about 3. So there could be, kind of some setback or pullback given on what happens there. But the fact is inflation is coming down. If jobs don't surprise to the upside, we are getting some softening. I think it'll sort of be status quo into next year. And, every year we've been saying so far, this is going to be the year where, corporate America is just going to crash. Earnings are going to be terrible, hard landing, no soft landing. And here we are. Corporations have figured out how to digitalize, how to cut back on costs, how to deal with these higher rates. And, the markets are sort of thriving and stabilizing at least.
Yeah, I mean, it's a message a lot of people are hoping for, that maybe we're finally coming through the other side of this. Maybe we've seen the trough when it comes to corporate earnings. Maybe things will be improved from here. What worries you? What could increase volatility?
Yeah. And, so it's really interesting because we keep going into New Year's with a feeling of perhaps stability and that we're coming to the end of something. And then we get, kind of a geopolitical issue coming out of left field. I think what scares me is just that if there's, some sort of factor, whether it's too much spending or geopolitical issues or perhaps jobs, any kind of number that sets inflation higher or, gives macroeconomic data to the Fed that would lead us to, perhaps not raise, but not have any cuts next year. I think if that happens, the market just kind of stays in this range bound, kind of situation that we're in now, which isn't so bad, right? We're ending the year high, but how do we get higher next year, right? You do sort of need rates to come down. You do need corporate earnings to grow and things like that. So any type of deviation in those numbers, I think, sets us back.